Hi, everyone. Hugo Alexander. Sinatra, how are you? Pretty quiet morning. Hi, LZ. So interesting action in the oil market, got above the pivot again. I'm still bearish, but I don't know what to do here because the trend really is up. So it's an I don't know now. I want to talk about this because I even asked Nargis yesterday. I've asked everybody about what this is in the Russell. So if you look at this, and this is your daily, I've been asking, is this consolidation before another move up, or is it distribution? So when I look at this, we still haven't made a new high. The S&Ps are at major targets. So is NASDAQ. 15,350 was a target I was hoping it wasn't going to get to, but it has. And this canary has been chirping in the coal mine so long it has larangitis. Hi, Richard. How are you? And if we take this level out right here, just do a kind of a horizontal line, because we've held this level here. Okay, so we start taking out last Friday, I think it was Friday's lows. To me, this looks like a distribution top. So, probably take another 50 handles, 100 handles in the S&Ps to generate a new high in the Russell. And it just can't seem to get going. There is a chance that this infrastructure deal falls through. I don't think the market would like that. And, we're all waiting for a lot of Fed speak out of Jackson Hole. So, I always ask myself, would you buy this market now? Yeah, it was a great buy last week. I've been fooled 3 times. I thought we had a top here. Well, really twice. Then I really thought we had a top here. And it's hard to keep talking about it because I'm the boy who cried wolf now. But I still think that when I look at this daily divergence here, it's really hard for me to say, okay, eventually we're going to confirm and take out this RSI level. I guess it could happen, but I just don't think so. And it is a Tuesday. The only thing that's held me back so far from trying to scalp is the shorter term TFs, with these readings that we have here. But if we can make a marginal new high today, intraday, and the RSI gives a new meaning to you should buy in the hole, okay. And we can't get above 70. Should we get one more high in both S&Ps and NASDAQ, I'm going to take a shot, okay? So I'm not going to do it because of this and this, but if we get one more pop intraday and take out this high, but we don't take out a 70 RSI reading, I'll give it a shot, see what happens, at least for a day trade, for a turnaround Tuesday. It's very possible that we're getting some type of high in Bitcoin too, and Ethereum for at least a pullback. That could be a turnaround Tuesday candidate. And in currencies, I still think even though we're back at this pivot at 17.5, look how many times it's come into play. So here we are again. So unless the Dixie starts closing back above this double top at 93.20, I still think the path of least resistance is lower, but we start getting back above 93.20, that'll be a different story. And that's about it. I just don't see that much. Friday, I saw this as a possible peak, and it worked for a few days. And I'm just sitting to see if we get some continuation here. And any questions on anything I've covered before I turn it over to Blake? I believe it's Blake and I again today. Anything? Everyone doing okay? Richard is watching 94. Okay.
Hey, Dale, good morning.
Yay, how are you?
Good. I was just going to say, Grega is going to be here in just a couple minutes. Hold on.
Oh, cool. Cool. All right. All right. So Greg is going to be here and we'll get an update. Euro Aussie. I don't know if I have it up, but I'll take a look before Greg gets here.
So how's it going today? Sorry, I just wanted to get
It's kind of quiet, man.
It is, it is. And I ended up getting stopped out of a trade overnight. I was short the Kiwi, and then some headlines came in overnight saying that New Zealand, the RBNZ, excuse me, they didn't raise rates.
Excuse me. Oh yeah, I read that they were having a communication problem or
communication difficulties. Yeah, and
that's a weird one.
Yeah, and Amanda posted some of the stuff in our news and research room that they were considering raising cash rates by 50 basis points.
Wow.
And they learned that lockdowns only delayed spending, and policy decisions won't be tightly linked to COVID. So the Kiwi just squeezed higher, and I was actually short the Kiwi. And I was short the Kiwi, excuse me, and it squeezed higher on that. And I'm like, I got up this morning, I'm like, what the hell happened? Because, I look when you get up and you see your P&L and it's a certain number.
I hate
and it wasn't the number that you went to sleep looking at. And it was off. And I'm like, what did something must have stopped me out. And that's exactly what happened overnight. So
yeah, what a way to wake up.
What's that?
I mean, for years, you get up, you have no idea, you turn it on, and right away you have to gird yourself with a positive mental attitude when the day starts, before the day even starts. You have to just shake it off and move forward. You know what I mean?
Yeah. Oh yeah. And you know what, I've been especially one of the things I guess I can take a step back and as I traded for a firm for the last 5 years, I got kind of numb to the idea. And this is, some of you will, or some of you will not be able to relate with this. I've traded for myself. I've traded for myself for so long, back when I worked for, MB Trading and the Wise Trade Group. And, when I was the chief strategist there, for Ally Financial, I was allowed to trade my own personal account, but I was, that was it, so for me, I always told people, look, the money that I make, trading really just kind of enhances my lifestyle. Cause I had a decent, they paid me decently as an analyst, not like some Goldman analyst, but I got a decent income. So all my, trips and all the fun stuff that I used to do was just all fueled by my trading. So, if I got up in the morning and, I lost $500 or $1,000, it wasn't like the end of the world. And it was, it was kind of, it was like that happens, it's like, ooh, damn, I lost, $1,500 overnight because I took a position that I shouldn't have been in that anyway. Oh, well, and then I'd have obviously the flip side to that is you'd wake up and, you'd be in a positive position or whatever. And,
right.
And those dollar amounts, they never really affected me. And then I started trading for a firm, and then, I could literally get up overnight and after sleeping six hours or 5 hours or whatever, and I could be down like 30 grand. And that's jarring, for me, that was, maybe it was more my mindset of, where I was at in my career. But that, you get up in the morning, you're like, damn, I got to claw out of a $30,000 hole. There are obviously the flip side of that too is, I'd get up and sometimes I'd be in a really profitable position too. And I'm like, dude, I'm done for the week, but those are that type of dollar amount for the last 5 years really numbed me to a lot of things. So like last night I got up and, I'm down some money, but it's like, I got stopped out of something. I'm not really too sure what it was. So anyway, those are the kind of, I don't get it. I'm like I said, I'm a little more numb to overnight gains and losses after coming off the dollar amounts that I've been trading for the last like 5 years. So let's talk about some of the moves. So when you're talking about the Kiwi, so the Kiwi just squeezed higher right up. I did not expect us to get up here. So what I did yesterday, just so you guys, I can kind of, work you guys through what I was doing. I'll just take it to right here. So I was shorting the Kiwi yesterday as we were approaching the 68.80 level, the breakdown point here. I'm like, okay, well, I'm willing to short it here. And then also as we hit the 38% retracement right here, add to it. So I had, I think it was like about 3/4 size position right here between these levels. Let me just show you. Right here. And then obviously the RBNZ that these comments come out, of course they're going to come out when I'm sleeping and I have, no idea what's happening. It obviously happened right here. So as I was asleep, I got stopped out right at 30. So my position was, it was at, 69.02 was like my average. And I got stopped out for a 30 some odd pip, trade. But yeah, here we are right now. And probably because I got stopped out of it, it's probably gonna reverse from current levels. I always like to joke with that is like when I get stopped out, it's usually the high or the low, whenever that happens. But I did end up getting stopped out of that for a loss. But that's one of the movers. If you're wondering why that had happened overnight, that's the reason why. You look at the Aussie New Zealand, that probably took out these lows, just new lows, just enough to stop out people that were long as well. So now if you take a look at like some of these other pairs, like I'm gonna show you the dollar mex. This is a currency pair that I've really been focusing on because I'm looking to be aggressively long the dollar mex. And this is I played it on the long side last week. It was my chart of the day. I want to say like, I forget whatever day it was, like last Tuesday or Wednesday. I was trading it on the long side at the bottom end of the range, looking for it to get to the upper end of the range. And it did. And it actually broke out. That I didn't expect. So now we're just sitting in a bull flag pattern. And while we're above this breakout point at 2025, I want to be on the long side. So I think this is the dollar Mexican peso has built a nice base here. And these
wouldn't a move like this normally happen, Blake, during a risk off period and there's no risk off and it still looks great?
Yeah. Well, that's the thing is the emerging market currencies like the peso or, the lira or, whatever, EM currencies you're trading, they tend to do better when risk is higher. So, but what you've noticed is all of 2021, the dollar Mexican peso has held up well. So if there is even a whisper of risk aversion, this thing is going to spike higher. And that's why for me, I look at the markets and I'm like, okay, we're probably pretty overbought. Or let me just rephrase that. You look at the S&P, we're at the upper end of the wedge. So, you get a move like this is a good example, right?
Yeah.
You get a move like that in the S&P. What does the
You know,
dollar
the
Mexican peso do?
Yeah.
The dollar
Breaks
Mexican
out.
peso, does that. And so if you go back to the S&P and you go, okay, well, if I get another one of these from up at the top of the range to the bottom of the wedge, right? Sorry, I meant to say wedge, top of the wedge to the bottom of the wedge. What happens with the dollar Mexican peso? Oops, dollar Mexican peso here. Euro
Continuation
same way.
move.
Yeah, so then we get a move like this.
And
so,
it didn't give much back with the S&P's recovering, getting everything back from that break that broke out the peso.
Yeah,
So,
yes, and that's why we're flagging and consolidating. So, if I am trading the dollar Mexican peso in relationship to the S&P, and I'm like, oh, the S&P is breaking out to the upside. Oh my God, we're almost at 4,500 in the S&P. I'm going to short the hell out of the dollar Mexican peso. I'm not really getting paid for that, right?
Yeah.
So what happens when the S&P actually, trades back down to 4,400?
So it's trading well with a headwind. What's going to happen when it has another tailwind?
100%. So, so for me, I'm just looking to be on the long side of the dollar max, and so this is kind of like on my radar at the moment. One of the other things, and Grega, are you here? Let's make sure he's here. I don't want to. I think we might have to.
He might be in the general population.
He might be.
Prison.
I think in the prison.
He's out getting exercise, walking around the yard.
We have to
promote him.
Hold on.
He's not here, guys. He's not here.
Oh, Steve. You know what? I wonder if Steve is here.
He's not here either.
How you doing? Okay, well, Grega should be here any moment. I want to make sure I'm not taking his time, because I know
we have Kathy Lean today too.
And then we're gonna have a good interview today too. So, speaking of interviews, you know who I interviewed yesterday?
You guys I do know.
Steve knows.
Your mama? Just kidding.
Oh yeah.
Who, Steve?
Okay. I can't give it away, Lynn Alden.
No, I actually tweeted about it last night. Yeah, I interviewed Lynn Alden, and we had a great.
Oh yeah, she's very good.
It was like about a 40-minute interview, and we talked about cryptos. We talked about the dollar.
She's a big dollar bear, isn't she?
I don't want to give it away. Well, I don't want to tell you everything.
I can tell you that since I've watched the interview, it is a nice interview, covers several topics, and I think people should
go listen to it.
Go listen to it. Hey, Grega. Now, having to do with when it's going to be available, it's currently stuck at 66% uploading, so it might take a little bit, but yeah, within the day, the interview is going to be available in Trader Summit.
You guys will really enjoy that one. I said, it's a great. I had fun doing it. She's so knowledgeable. I love listening to macro people like that, because it gives you a good, it gives you a good thesis to trade off of, or to be
gives you biases.
Yeah. I'm overall. I keep. I really like buying Bitcoin because, I like Lynn's idea of, trading Bitcoin versus, some of these other altcoins, the blah, 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 whatever, but it helps shape your bias when you hear, different type of longer term macro analysts like this. And so, we talked about, gold, the dollar, inflation, the Fed, what the Fed's thinking, going into this week. So I think you guys are going to really enjoy it. So anyway, Greg, I didn't want to take away from your time, so I'm going to shut the hell up. And I'm going to give you the charts. So thanks for being here. Steve, good to hear your voice. Dale, have a great interview with Kathy.
Okay, and Grega, you now have control of our television sets.
Ooh.
Like the Outer Limits used to take control. Ooh, what power.
Steve, shouldn't you be on vacation?
I am on vacation. So that's like
this
part
is
of
a vacation.
Yeah, part of vacation's enjoyment.
Yeah.
I'm here voluntarily. Nobody forced me to.
Yeah.
We are jealous. Well, let me just share the screen.
Yeah, you and Stel win for most desirable vacation spot this year with all your pictures.
You live in Greece. One thing you have going for you is, a lot of vacation destinations that are really worthwhile.
Okay, here's your.
We have to
can
have
see your
something
stuff.
going for us, right?
Oh yeah, it's amazing.
Okay,
Okay,
Grega, you're up. Your charts are up.
Okay, so as we talked with Steve several times over the last few weeks, we both agreed that despite very big retracements, while the US dollar has seen this recovery, we are still seeing this as a corrective movement. So it's a very nice ABC movement right into this 100% objection. It's a perfect equal level where this rally could slow down. Also keep in mind that you are here at the former wave 4. So I would not be surprised to see this weakness coming through. Even if that would be only a 3-wave drop, I think that we could pull down back towards 92. Also, if you look at the 4-hour time frame chart, we are seeing a very nice clear 5-wave rally with 5 subways also structured here in this 5th wave as well. You have divergence here, and we are now approaching those 2 trend lines of the recent channels. So if we can break this and make a daily close below them, then I think that more weakness here is coming in play. Also, on the opposite of that, if we take a look on euro dollar, actually I'm still observing 2 different scenarios, just to give you the full perspective here. Now the first one shows the idea that we will stay trapped in this consolidation since 2016 as a triangle if we are going to see more weakness here for a wave D, or maybe this whole rise will resume higher into a 3-wave movement, meaning the 2018 highs could be taken out. So looking at the daily time frame charts, here's this wave D that I talked about. Now imagine that this is a corrective flag, meaning it should take us all the way back to the lower side of this triangle range, right? So you are seeing the 7 swings in progress. But even this bearish structure should see some kind of recovery here for a wave B, even if just short term. And here on the right, we have another interpretation where this drop could be like a finished wave 4 at the former wave 4. Also keep in mind that you're at the 38.2%. So even this one suggests that we could rally, but much more aggressively compared to the first wave count. So if we try to merge both of the wave counts, it looks like that euro could see a recovery because, as I said, on dollar index, we are seeing 5 waves up. And here on the euro dollar, obviously completed 5 waves down. Still a little bit early, but if we can break this trend line resistance, I think that this recovery is going to be in play, most likely back to the former wave 4, and then we will try to identify the structure if this was only a temporary rise or maybe change in trend. Also, another market that I think we should keep an eye on is Aussie. It's been on a back foot after these lockdowns that are that probably will resume.
By the way, nice pip on the short side near the end of it, and the acceleration phase was a nice pip.
It was. I was quite surprised how extended this 5th wave was back then. But still, it's the final leg of the sequence here of this 5-wave structure. Always, as you know, when we are coming out of triangles, it means that you are most likely finishing the higher degree structure. So in such case, it's very hard to stay in the trade, but definitely you definitely should be aware of potential reversal. And it looks like that this reversal is happening right now. It looks quite impulsive on a smaller degree time frame charts. So I think that we are headed back here above the previous support or low, if you want, the 72.90. And after that, as you know, the bottom formation would be in place, and I think that we will see more upside. Also, looking here at copper, let me switch to the daily chart. Keep in mind that you have 3 wave setback here, back to the former wave 4 triangle termination point, and very sharp bounce. So this one looks like it wants to see more gains as well, and obviously this could be very positive for Aussie, even if just short term. Also, another market I want to take a look at when talking about the Aussie, I know that correlation is not perfect, but still, I mean, gold is showing us some very encouraging bullish price action. Firstly, let's go to the smaller time frame, 1 hour. Notice that after this sharp sell-off that occurred 2 weeks back, we are now seeing this very nice 5-wave rally that erased all of those losses. So it means that bulls are back in action, because when you can erase all of that strong move to the downside, then clearly it's evident that market has bottomed and that we may see more gains coming. So if we have 5 waves up, we can expect more upside. But I would be careful when calling up any significant breakout, because keep in mind that we are still here in this triangle range. So ideally, you are now going to finish this wave A that belongs to this wave D within a triangle. So we may continue higher towards the upper trend line in the next few weeks, but keep an eye on this potential wave B setback. After all, you are at this intraday trend line resistance at the previous noise of this consolidation of a triangle. So we clearly could see some kind of a slowdown, but I think there can be some very nice short-term opportunities here to catch the upside or join this trend if we see this pullback coming. I want to look at crude oil. Crude oil is also making a very strong reversal here. Looking at the 4-hour chart, I think that we have enough information here just to give us the idea where the market can be headed next. I mean, clearly we cannot count this as an impulse from the highs, and always when that's the case, then obviously you're looking for this to be corrective price action. So I'm looking for an ABC, X-ABC movement. Very nice support was down there at the equality level. And now we are also seeing this broken trend line, meaning more upside as well could be coming here after retracement. I think that this could also offer some kind of opportunities on the long side if we see this pullback. At the same time, commodity currencies could see more strength, especially CAD, maybe even Mexican peso could see or at least slow down at the upper side of the triangle. Since I mentioned this dollar Mexican peso, here's this triangle. As you can see, A, B, C, D. Now you are potentially in a wave E. Notice that we have 3 waves up also here into 61.8%. Of course, a little bit too soon to say that we are going to see a top here, but if we can drop back towards 20, I think that this would give us an idea that we are headed towards the lower side of the range, and maybe even some kind of a breakdown coming in September. What I have left, New Zealand dollar against the Japanese yen. This one could be quite interesting. I mean, I always, when I'm looking at commodity currencies versus the US dollar, I somehow always like Aussie and New Zealand dollar, maybe because of history. I mean, always when we were in risk on mode, those two currencies somehow were doing quite well. So for now, we are turning into risk on mode. We are resuming to a new high on the stock market. So I'm looking at New Zealand dollar versus Japanese yen. We have a very nice 3-wave setback. And it looks like that we can see more strength here. Keep in mind that on a daily chart here, we have seen a 3-wave setback that can be representing wave 4 of a 5-wave movement. I think that this is a quite nice looking wave structure, suggesting more strength here. So I will wait a little bit more here, and then let's see if we get some kind of a retracement here on the short-term basis, maybe to join this trend because I think if stocks will stay supported, those crosses could very fast erase the previous losses.
Can you give us a quick look at Euro Aussie? Grega, one of our attendees, one of our community members are asking.
Yeah, sure.
I asked me, I didn't have time. Go ahead.
So here's Euro Aussie. I still think that this one is in a corrective rally here. I mean, we have seen some overlaps here in the last few sessions, of course. This pair, if it's trading lower, it's normally in risk-on situation. So if Aussie will somehow try to attract the buyers while the stocks are trading higher, then I think that sooner or later this one will come back to the downside. So I'm looking at this to be a 7-swing correction, ABC X ABC movement. Currently, we are slowing down at the upper side of this corrective channel of the second ABC movement. So watch out maybe for a little bit of more weakness, and then there could be some interesting intraday rallies to short maybe on this pair while the market is trading below the recent lows, recent highs.
Thank you, buddy.
Thank you.
All right, Greg, a nice presentation. Got 2 weeks in a row we've gotten to hear you. So appreciate it.
Thank
nice
you.
work. Good
Thank you, Grega.
stuff.
Thank you. Bye-bye. Enjoy, guys.
Bye-bye,
Good,
mate.
good stuff. And Kathy is with us now. So Kathy, welcome back to F.A.C.E. It's been a long time since you and I have had a discussion or a conversation. I want to welcome you back here and ask you to unmute and say hello to our community. Appreciate you being here.
You asked me to unmute, by the way.
I asked you.
Yeah,
Well,
I just received
now I'm asking you to mute. All right. Hi, Kathy.
Hi, good morning.
Oh, good morning, Kathy. It's great to hear your voice. It's been a long time. I really appreciate you coming in and talking to us. How are you doing? How are things going?
Things are going well. I got my camera working. Perfect.
There you go. Okay.
For some reason, it was not working a minute ago, so I'm happy that it is.
Okay. Well, then, I'll join you. All right. So great to have you here. I'm not sure exactly. You can still share your screen if there are any particular markets you want to talk about, or we could just have a little conversation here. What are your expectations out of what might happen in Jackson Hole, Kathy?
So that's a very good question, because Jackson Hole is obviously front and center this week. And what's really interesting about the movements in the markets is that it's kind of inconsistent with what the media is talking about, or what the price action is inconsistent with what the market thinks is going to happen. Because the Jackson Hole Symposium is basically the perfect venue for the Federal Reserve to basically kick off the conversation or kick off the timing for tapering asset purchases. We've been talking, or the market's been talking about this for months, and they've been zeroing in on this August symposium after they passed last month. But if you take a look at the general price action of the markets, stocks hit, S&P hit record highs yesterday. Yesterday, actually, Treasury yields were down. And even today, the US dollar is kind of on its back foot, particularly against the Japanese yen and the Swiss franc. So that is not necessarily consistent with expectations for taper, right? Because if
there's no fear.
Exactly. And so all of this reflects fear. And, why is that happening? And the reason is because, first and foremost, the Federal Reserve still has a lot of options. Everyone's zeroed in on August or September. But in reality, there's 2 additional FOMC meetings after that in November and December. And September is when they kind of gather all their information and present their most updated economic projections. So they still have some more work to do. They're still going to get one more non-farm payrolls report before the September meeting. So they could kick the can to the road to September and not really say too much, because right now they're balancing Delta concerns with inflation. And inflation is a worry, but we all know that they firmly believe that inflation is transitory. Also, lumber prices have pretty much crashed and are back to 2008 levels. Oil prices, even though they're up nicely today, are well off their highs. So inflation is not as imminent, it's not much of a pressing pressure as it had been before. Whereas Delta is obviously a growing pressure that's caused lockdowns that could very well threaten the global recovery and is more of an imminent concern. So the price action in the markets reflects the fact that they kicked the can down the road. That's what I've been trading for the past few days. And I think that may be what leads us into Jackson Hole this week.
Do you think the infrastructure deal is priced into the market that it's going to pass? And if it doesn't go through because of the conflict, not between parties on this, mainly within the Democratic Party about how they go about passing the hard infrastructure instead of but human infrastructure of 3.5. Do you think the market would be disappointed if, with Biden being under pressure and his popularity dropping, that this deal blows up?
Well, I think politics aside, because I usually don't express judgment on
economics.
Yes. And if your question is it priced into the markets, I think it is priced into the markets. There's always going to be an oomph when a deal that large in reality passes. But you can see that despite the Delta concerns and the Federal Reserve's, wishy-washiness and the inevitability that central banks around the world are going to reduce asset purchases, stocks continue to push higher, and they refuse to fall. And I think that's a reflection of the expectations that the money is still going to come in, that the infrastructure bill could pass. Now, of course, if it doesn't, that's obviously a disappointment, but that's not what the market is thinking is a greater possibility right now.
Okay, so you talk about inflation and lumber prices coming down, and I just personal experience. I'll tell you, I've ordered a few things online, and then I've expected delivery even from someone like Walmart, and then they'll send me a text and say your delivery is delayed. We don't know when we can get it to you. So the supply chain issues don't seem to be getting resolved. So really, with higher wages and what's happening with certain shortages, I mean, and they're not, I'm talking about gravity chairs and things from just things that I didn't want to go to the store to get. They're canceling deliveries. There's supply chain issues that may make inflation a lot less transitory until that resolves itself, and I don't see it resolving itself. China has closed their ports. Isn't that going to only exacerbate it?
Maybe you should stop ordering from Walmart, because I don't have the same problems with Amazon or
not at all.
Target. So
okay,
maybe we should go short Walmart.
All right, a good suggestion. So I'm glad I brought you on.
But your concern is a legitimate one, because that supply chain issue was very evident in the UK PMI numbers, where they slipped to 6-month lows. So, the US is not the only country facing supply chain shortages. And that is why the Federal Reserve has to act. It's just not a matter of if, it's a matter of when. And I think the supply chain issue is a very serious one. And I agree with you that these things are not resolved quickly. And when suppliers raise prices, they're not going to be willing to drop them quickly, because they have to make up for a lot of the lost time and profits that they have. So all of that is an issue. But I think that because job growth has been very, very strong, the Federal Reserve does need to act. And so, it's just whether or not they want to tread cautiously and wait for a few more data sets before doing so. So it's not as if they're going to wait to November, December. It's just a matter of August or September.
Okay. Why don't we go to your wheelhouse, currencies, a little bit here. And I want to talk about, the dollar has had, what a contrarian play coming into 2021. And Blake talks about it a lot. People said the best trade for 2021 was short the dollar. Okay, everyone came into 2021 bearish a dollar. We bottomed at 89.20. Recently, we made new highs, broke out over that little double top at 93.20, and have negated that breakout. Is this the big sell that the bears were looking for? Is this just going to be a correction, in your view, in the dollar before we get another leg to the upside? Where are you at on the buck?
Well, I think if you look at the US dollar itself, one of the main reasons why it's had so much, it's seen, that much pressure initially, and then, it's kind of gained a little bit of traction now, has to do overall with risk appetite. And I think the real question is, do we all believe that the party in stocks can continue, right? And, it's a very interesting question. And I will be the first to say that I have been skeptical of the stock market rally throughout these highs.
I have for about a decade. So
yes.
So I'm asking, the stock market performed very well with this dollar. I thought that once the dollar turned, we might start getting some risk off. It fought that headwind. And if the dollar is going to start coming off, if it could do well with a rising dollar, you would think it'd be jet fuel if the dollar is going to start heading lower. So do you have a view on the dollar?
So I actually think that the dollar is due for a stronger rally. And the reason for that is because I believe that at some point stocks will correct. And when they do, it's going to cause money to flow back into the dollars. That correction could very well be caused by the kickoff of taper and maybe the expectations that the Fed could raise interest rates in late 2022. And those expectations kind of growing as time progresses and leading the Fed from being behind the curve in the taper cycle to ahead of the curve in the tightening cycle. And I think that could really draw demand back into the markets. And there's a lot, there's a lot of risk out there. And it's hard to imagine this rally in stocks and this continuation of risk appetite persisting.
Okay, well, I want to ask you a question I've asked everybody, and I finally have answered it myself. The canary in the coal mine when it comes to stocks, it's been the Russell. The IWM has been moving sideways, hasn't made a new high since either March or April. And these are domestic issues. Is there a message in the fact of the Russell 2000 underperforming and unable to make new highs with almost every other index domestically and globally? What do you think about what's happening there? Any view?
Honestly, I don't have too much of a view on that. You said you answered the question yourself, right? So I've been head down on, kind of the global macro story and kind of riding the opportunities in some of the foreign currencies as monetary policy diverges, and focusing far less on what the divergences between the U.S. indices. That's kind of Boris's wheelhouse.
Oh, okay. All right. So when we look at something like the precious metals with a potential taper coming on, and it was really a dramatic move. We had a couple of Sunday evenings ago where there was kind of a little flash crash in gold and silver. Can gold and silver be okay and trend higher with the dollar possibly still? Can they both go higher together, Kathy? The precious metals and the dollar?
I think so. I think if you get a situation where markets get nervous, you could definitely have that opportunity.
Okay. And the gold silver ratio, do you watch that at all? Because a lot of people that like I think the Reddit people think they're going to be able to muscle short squeeze the silver to $1,000, and all these ridiculous kind of levels for where silver could go. Do you prefer silver over gold, or do you think it's more you'd be better off in the monetary metal than the semi precious metal?
I love trading spreads. And I think that, the silver and gold spread definitely has its opportunities. Sorry, I'm getting distracted. Right now, I'm trading dollar yen. I'm making profits on this drop here. So I'm in trades as we're speaking. But yeah, spreads in terms of equity spreads, commodity spreads, currency is obviously a spread itself, but yeah, I absolutely, like trading spreads. And I think that in terms of gold and silver, yes, I do think that they can move at the same, obviously move at the same time, but the relative change that we're seeing in the spread, could present itself as a lot of opportunity. So I think, for the most part, right now, with the Delta variant growing, I think the spread could move more in favor of gold than silver. And, but honestly, Dale, I could be wrong because the market doesn't care about it right now. It doesn't seem to care. And that's what we're seeing right now. But while that may be the case in stocks, that's certainly not the case in currencies, because there's a huge amount of opportunity that we've been taking advantage of in regards to the varying Delta scenarios across the globe. Like I've been short Australian dollars for the past few weeks, and we caught an Aussie CAD short trade at the beginning of this week because of the extended lockdowns in Australia. This morning, we banked pips going long the Canadian dollar against the Swiss franc, and we've been long Canadian dollars this week, not only because oil's been doing so well, but because Canada has been, they just newly vaccinated. They're not dealing with the new, surges and waves that other countries are, so there's opportunities that the stock market is ignoring in currencies.
Okay, so you're short the yen. Do you believe in the correlation of U.S. dollar yen heading lower means lower yields? And it's I've seen them marry up at times, and I'm wondering where you're at on yields, because people have expressions. It's all about yields. That's a yardstick and measurement that we use for valuations. In fact, the FANG stocks have been doing better as rates have softened. You have a view on yields and rates sideways, especially with the taper if there is a taper? Do you expect yields to rise, or the market has reacted that a taper is going to slow things down and it takes yields down? Which way do you think we could go in the 10-year?
Well, I look at yields every single day. It's absolute, key component of my trading. In fact, this morning, the reason why I went short dollar yen was because 10-year rates were up over 1%, and I felt like it's getting sticky. And I didn't think that it was going to stand much higher against the 20 SMA on the daily chart. So we went, and even though, yields are up, and normally that would be a sign to buy dollars, because of the inability of dollar yen to rally, and because the yields were touching that 20 SMA, I went short dollar yen. So yes, absolutely. Yields are very, very important and I look at that not only for my New York session trades, but also the yields for my Asia session trades. So that is one of the most important components of what I try to teach our members to look at every single day. Now, in terms of the overall picture of yields, you're absolutely right. They've been consolidating. For the past, since late July, we've just been in this kind of broad range trading zone. And I think that the taper will, probably initially lead to a rise in yields, but it's really about how aggressive the Fed signals that they're going to be. And I think they're not going to be that aggressive, or they're going to sound open-ended. They're going to open the door up to tapering, but I think that they're not really going to suggest that, it's going to be an aggressive cycle. And that could end up leaving yields pretty much, where they're at, because what's the Fed's goal, right? What's the central bank's goal when it comes to these actions? To contain volatility, right? No one wants to see a huge surge in yields, especially if the global recovery is precarious. So I think that they're going to probably take the action either August or September, then talk it down, and that's really going to disappoint any market watchers, because it's not as if the recovery is so strong that they're just ready to say that they're going to taper and then, set the very clear schedule for their plans to do so. Okay,
so Paul, I assume, is probably thinking about his legacy, because it's possible he's not renominated. His term ends when? I think early next year. There's not that much time. So I think that kind of fits with him not wanting to do anything radical that's going to create a market event if this is his swan song as Fed chairman. Do you think that could play a role? So he doesn't have to go sing Kumbaya with Janet Yellen and Ben Bernanke like he did when he was tightening at the beginning of his term? I think he remembers that.
So politics aside,
Yeah.
I think it wouldn't be wise to do anything radical, period. As a central bank, it's your responsibility to contain volatility and to do what's right. Maybe I'm an idealist, but this is not the time to do anything radical. I mean, if we were in a soaring inflation environment and I had the justification for that, I'd say, let's go ahead. But, there are signs that inflation pressures are starting to ease and there's a lot of risk ahead. And so, as a central bank head, it is his responsibility to not do anything radical, legacy aside. And also it is every central banker's kind of ideal to minimize volatility whenever a big action is taken, which is why he's been very clear that when they are ready to taper, they'll be sending a lot of messages and making sure there's plenty of time for the market to adjust to that. And I think, that's what we're going to get from him.
Okay, well, you look at the VIX, and I know we're not at real high levels, but to me, it doesn't look like they're maintaining volatility. If you look at the action in VIX, in 1 week, we went from 15 to 25. A few times this has happened in the last few weeks where you've had spikes and then it gives it up. And not just small spikes. I mean, to go from 15 to 25 is almost a double of volatility in a few days. So do you read any that? I think plays into your feeling that the market is overvalued. And to me, it seems like there's some problems with maybe market structure that we could have the VIX jumping around the way it does instead of just grinding sideways. You're getting pretty good rallies and then you're getting vicious decline. So do you buy and it's kind of happening with the markets, do you buy the maxim that markets top with violence and bottom in silence?
So, everything you said is exactly what I think, which is that all that volatility in the VIX, which is an interesting way to put it, is one of the signs, one of the reasons why I'm so dubious of this rally. And it's hard to, granted today, futures are up far less than they were yesterday. And maybe, right, we're there. But I think, when we are at these tops, you shouldn't be, the volatility in the VIX is a reflection of indecision. And right, I think when we're at these tops, at these levels, we should not be seeing this volatility in VIX as markets were going to power higher. And I think that's another red flag for me. And that's actually something, I'm glad you're watching it because that's something I'm watching very closely as well.
Yeah, well, I think this interview may mark a high for a pretty deep correction in the market, Kathy. I'm talking my book. I'm talking my book. I own a lot of December puts that I'm underwater on. And I'm thinking that you're my good luck charm and that our interview is going to cap this rally. But I'll tell you something. It's so refreshing and what an excellent interview. And I don't want to let as much time pass between the times that you and I get to talk about markets together.
So I want to add something, Dale, just to give people a sense of what I do. I think that if anyone's followed what I do, I think from what our conversation is geared towards, I think it's important to realize that when it comes to trading, it's absolutely essential to fuse fundamentals with technicals. And fundamentals, and our whole conversation was about fundamentals because fundamentals drive the trade on both a long-term as well as a short-term basis. We talked a lot about long-term direction of currencies, which is extremely important because trends when it comes to fundamentals do not change on a dime. Usually in the economy, the pandemic gets worse and worse and worse before it gets better, or countries' economic performance improves or deteriorates on a consistent basis before it turns around. And so, what's extraordinarily important is to use your technicals and in those directions. I have my own technical indicators. You have your own technical indicators. Everyone listening has their own technical indicators. How do we pick the best trades? Do we just blindly follow our technical indicators? Absolutely not. The key to my success is that I use my fundamentals to filter the technicals. So for example,
they give you biases and narratives and your charts are your triggers.
Exactly. So for example, I've been bullish Canadian dollars, for the past few days because oil is up. And there have been signals on my technical indicators where to sell the Canadian dollars, but those are not the ones I took. I waited for the ones that were consistent with my fundamentals. And that's the real takeaway that I want to leave with your audience, which is that.
All right, but I have, go ahead, but I have one more question because you've mentioned COVID at least 5-10 times in the last 25 minutes. What's your take on how this thing is going to go? Do you have a sense that this could end up being worse than what happened a year ago even though we may not have lockdowns? I mean, I'm confused. I see the president at times wearing masks, and then I watch an NFL game and no one has a mask on. And I think the whole country is pretty confused about where we're at. Do you have any clarity about where you think we're going with this into the fall?
In no way, shape, and form am I a medical expert.
Right.
But there are more and more variants. There's certainly more and more cases with Delta. Some of the US states are hitting record highs. Delta is affecting children a lot more. I can tell you that I am switching my child from a school. I have a 3-year-old, and he goes to a school right now, and he has for the past year and a half where they don't wear a mask. And thank God, no, there's been no cases at all. But we're switching him to a school where they do, because we're worried because there's no vaccines for children. He's young, and
Delta is a different story than the early one.
Exactly, it's a different story for children, and they say Lambda is probably worse. And so I'm not a medical expert, but I'm personally taking my precautions for my own family. And I think that the equity market is not reflecting those issues that are already becoming apparent in other countries. And so that's the way I look at it. And if you share my view, then that is a view that, and for you and for everyone listening, that is a view that can help you drive your trades. It's been a view that's been helping me drive my trades. And that's how we all win, I think, in terms of trading, which is not looking at technicals blindly, taking everything that we've talked about today, Dale, and using that to only select the best technical trades that are fundamentally supported.
The consummate pro and great mother, Kathy Lean, my trading warrior sister. The best way for people to continue to learn from you and hear what you're thinking, Kathy, is where? So
there's two places. You can follow me on Twitter, Kathy Lean FX, or you can trade with me every day at bkforex.com.
May everything be very green for you, Kathy, and healthy.
Thank you so much. You too,
It was great talking to you, Kathy. Kathy Lean, everybody. A lot of people really enjoyed seeing and hearing you. And I appreciate your giving spirit, coming here and sharing your knowledge with our community.
Anytime.
Thank you, Kathy.
Bye.
All right. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Good hunting the rest of the day. And hope you enjoyed that interview with Kathy. I had a great time doing it. So I'll see you guys tomorrow. Adios. And I'll get a haircut soon. Lein. Okay, Dolce?